Did you know that home prices in cities like San Francisco and Austin have dropped by as much as 10 to 12% over the past year? And with the Federal Reserve already cutting interest rates by 50 basis points on September the 18th and another 25 basis points cut expected on November the 7th, the housing market is set for even more changes. These shifts could dramatically impact home affordability and prices across the country. This could mean a huge opportunity or risk for anyone looking to buy or sell right now. With such drastic shifts, you could be missing out on a critical opportunity. So, what's driving these trends and what does it mean for you as a buyer or a homeowner? Let's dive right in. Welcome back to the channel. Today, we are breaking down why home prices are plummeting as interest rates start to drop. Whether you are looking to buy or already own a home, the market shifts could affect your financial decision in a big way. I'll walk you through what's happening and how you can make the best move in today's unpredictable market. In the next few minutes, you'll know exactly what you should do next to stay ahead in this shifting market. Right now, the housing market is facing a lot of uncertainty. On one hand, we are seeing price declines nationally, with median home prices in 2024 having dropped around 413,000, down from a high of 450,000 in 2023. This could be a relief for buyers who were priced out of the market last year. But on the other hand, mortgage rates remain high, currently hovering around 6.65% for a 30-year fixed rate mortgage compared to an ultra low of 3% we saw in 2020. So while homes may be cheaper, the cost of borrowing has skyrocketed, making affordability a real challenge. And despite Federal Reserve cutting interest rate by 50 basis points on September 18th, mortgage rates have actually continued to climb steadily since that cut. This is largely due to the persistent economic uncertainty and inflation pressures, meaning home buyers are still feeling the squeeze when it comes to financing. Many buyers who thought they could finally afford a new home are finding higher mortgage rates still make it hard to get in. So what's driving these price drops? Over the past couple of years, the Federal Reserve has aggressively raised interest rates to combat inflation. However, in September, they started reversing the course by cutting 50 basis points. Even though these cuts were meant to stimulate the economy, the mortgage rates have continued to climb and currently are sitting at 6.65% for a 30-year fixed. This is because of the inflationary pressure and economic uncertainty are still keeping borrowing costs high. So even though the Fed is cutting interest rates, high inflation and global uncertainty are still pushing mortgage rates up. As a result, home prices in overheated markets like San Francisco and Austin have dropped by over 10% in the last year. For example, in San Francisco, the average home price fell from around 1.5 million down to 1.35 million, while in Austin, the price dropped from 600,000 to 540,000. This decline is partly driven by a combination of increased supply and reduced demand. In 2023, new homes made up about one-third of the housing market inventory, a significant increase from the historical average of 10%. This surge in construction puts downward pressure on home prices as more homes become available in the market. However, demand has softened because of high mortgage rates currently sitting at 6.65%. And these high rates are keeping potential buyers on the sideline, with many unable to afford higher monthly payments compared to super low rates in 2020. Looking ahead, the housing market will be shaped by these dynamics: more homes available but fewer buyers due to financing cost. Factors like job growth, consumer spending, and inflation will continue to influence whether home prices stabilize or see further changes. For now, the market is in a delicate balance of supply and demand pressures. So what does this mean for the housing market heading into the winter months? Historically, this is a seasonally weaker period for real estate. A colder weather and holidays tend to reduce buyer activity, Many experts predict that home prices will likely stabilize or see minor declines during this period given the reduced demand. However, don't expect a massive price crash. Supply levels are still constrained, and the Fed is expected to cut rates by 25 basis points in November and again in December. So these cuts could bring mortgage rates down slightly, which might improve affordability and provide some support for home prices as we move into 2025. The Fed is expected to continue cutting rates into 2025 until inflation falls below 2%, potentially dragging mortgage rates lower and giving more buyers access to the market. This could limit the extent of any price drops. According to forecasts, we could see 1 to 3% annual price growth depending on the region, but next few months could be relatively flat or even slightly down due to seasonal slowdowns. For buyers, this could be an opportunity to find deals, especially in areas where sellers are motivated to close before the year ends. For sellers, it may be the time to adjust expectations and price competitively if you want to sell quickly. Looking at interest rates, while the Fed has already cut rates and more cuts are expected in November and December, mortgage rates remain volatile and are likely to stay elevated through early 2025. This means that even if home prices drop slightly during the seasonal lull, affordability will remain a challenge. For buyers asking whether they should wait for prices to drop further or lock in now, the key question is whether you can afford current rates. Waiting for future price drops may not offset the high cost of borrowing in the short term. So, should you wait for prices to drop further or lock in your rate now? That's the big question everybody is asking, and the answer depends on your specific situation. While home prices may remain flat or dip slightly during the seasonal slowdown, mortgage rates are expected to stay high in the near term despite the Fed's cuts. So if you find a home that fits your budget now, locking in a rate might be the smarter move, as waiting for prices to drop further may not offset the high cost of borrowing. If you are hoping for a big price crash, you might be waiting a long time. Now could be your best chance to buy before rates drop further and competition picks back up. To sum it all up, while rate cuts could provide some relief, home prices and mortgage rates remain unpredictable, and hence affordability will likely remain tight for many. But small price dips could create opportunities. The relationship between rate cuts and home prices is complicated, so staying informed will be key as the market continues to shift. What do you think? Are you holding off on buying or selling? Or are you planning to make a move soon? Drop your thoughts in the comments below, and don't forget to like, subscribe, and hit the notification bell so you don't miss out on my next video where I'll dive deeper into 2025 real estate trends and what you need to know for the coming year. Thank you for watching.